Exchange-traded funds, or ETFs, are financial instruments that track a diverse portfolio of holdings. ETFs could track an index like the S&P 500, commodities like gold, and a group of stocks or bonds. You can buy and sell ETFs just like shares on the stock exchange. Imagine ETFs as a basket of multiple holdings that you own. The beauty of it comes from the simplicity it provides. For example, instead of individually buying and managing shares of Apple, Microsoft, Amazon, Netflix, and Tesla, one could simply buy an ETF that includes and tracks the value of these shares, amongst others. So with a single purchase, you could own multiple shares through one ETF. More and more investors are using a dollar cost averaging strategy with a portfolio of ETFs, indeed an effective strategy to diversify and create long-term value. ETFs offer many strategies for investing. For example, if you're interested in investing thematically in the industry of lithium metal and battery tech, you could buy an ETF that holds multiple shares of companies in this sector. In this case, you're not really diversifying industries, but at least your investment is not relying on one single company. Similarly, you could buy an ETF focused on companies located in Asia or companies focused on space exploration. ETFs are the perfect tool for diversification. Remember, ETFs act as a tool to help us get exposure to diverse instruments, so it's important to understand how our money is being allocated within the ETF and the costs incurred. Let's start with the allocation. To understand it better, we have to dig deeper. We'll use a very famous ETF that I've used in previous videos, the SPY ETF. Let's assume we've bought 29 shares of the SPY ETF at an average price of $302.45. In this tracker, we can see how our investment of almost $9,000 is spread amongst the shares tracked in the ETF. ETFs disclose a percentage of the holding it follows, so in this case, this SPY ETF has 6.15% of our money allocated to Apple, 5.77% to Microsoft, and so on. The formulas in this tracker automatically show us the cost, market value, and return per individual share within the ETF. With this information, we can get creative with the data by visualizing the sector and region allocation based on the ETF. The SPY ETF is only US focused, so you can see the tracker is showing us full allocation to the US. Lastly, it's important to understand that the ETF providers charge us fees to cover the costs of administering an ETF. The good thing is that these fees are usually very low, and it's not taken from our bank account, but priced on a daily basis within the price of the ETF. Nevertheless, it's important to take into consideration when investing. These fees, also known as management fee or expense ratio, are generally low for passive funds like the SPY ETF, which follows an index, and higher for active ones like ARKX, an ETF focused on global companies engaged in space exploration and innovation. If you would like to download the tracker used to explain ETFs in this video for free, make sure to check out the ETF Portfolio Tracker demonstration video linked in the description. To access the tracker in dark and cyberpunk themes, make sure to visit my Patreon, which is linked in the description of this video. This is Planet Finance. Thanks for joining me. Until next time, happy learning.